My name is Brett Noyce. I'm the founder of Unbanked Ventures. I run a pre-seed incubator program in the Bay Area. 10-week program. We run 2 cohorts. We work with, as I said, early stage companies. We're focused on technology agnostic, but really looking at, like everyone else, AI, machine learning, and of course, blockchain. With that said, I'm going to let the panel introduce themselves, and we're going to jump right into it.
Awesome. Hi, guys. My name is Eric Meltzer. I work at In Blockchain. We're a full-service blockchain VC based in Beijing, but expanding globally. We run ICO Info, which is the biggest ICO platform in China. And we also run Yunbi, which is the biggest Bitcoin exchange in China.
So first of all, shout out to Canada for my lanyard. Thank you. I didn't have one down in the lobby. I'm Derek Brown. I'm CEO of a company called Exec. We are a startup based in Soho, New York. I was formerly at Adapar and before that LinkedIn, leading B2B software. We are building a PFM, personal finance manager, for the next generation, right? So for millennials, 18 to 34-year-olds. So think Mint, Level Money, which just got shut down, et cetera. But for the millennial generation and rethinking finance for them.
Yeah. Second is shout out to Government Ontario for sponsoring my trip here. My name is Dennis Chan. I'm the CTO of DeepPixel. I'm replacing my CEO, Giri, who can't make it today because of a customer meeting. So from everybody, customers first, especially for a startup. So DeepPixel, what we do is we build next generation natural language understanding deep learning engines. Right now, we use it for mainly chatbots and also AI augmentation for call center agents.
Hi, I'm Ken Stout. I'm the founder of Growth Fountain. We are an equity crowdfunding platform. And essentially, for the first time in 80 years, America's small businesses, entrepreneurs, and startups can publicly advertise their fundraise, and everybody in the world can now invest. You no longer need to be an accredited investor. And so we're registered, regulated with the SEC. We can facilitate those transactions.
Excellent. So let's just tackle, the title of the panel is Fintech Trends. Looks like we got some good representation here. We've got Title 3, we've got AI, blockchain, big data, probably missing 1 or 2 here. But so I'm just taking it around. We'll start with Ken. Tell us, what are the trends you see? Obviously, it's, yours revolves around Title 3. So tell us what you see there and what you see the future.
It's early days for us. I think there was a poll done recently, 500 small business CEOs were phoned and said, hey, have you ever heard of equity crowdfunding? And only 3 of 500 CEOs had ever heard of it. So for our industry, the challenge is spreading awareness that this revolutionary change in securities laws exists. In the UK, where equity crowdfunding has been live for 5 years, one of the predominant platforms there called Seedrs raised £800,000 for companies in year 1. In year 5, they raised £100 million. And so where I think this industry is going, when something goes digital, I think it all goes digital over time, and this eases the pathway for capital formation for early stage businesses. And so I think in 5-10 years down the road, every private fundraise will occur online, and it'll be a multi-$100 billion industry.
So trends in fintech, basically blockchain and AI. I can't say too much about blockchain, but I'll talk about AI. Basically, all companies have lots of data, and data is the new oil. Basically, we take text data and do deep learning to understand what's in there. For example, one of the companies that we talk to, they have lots of data. They can only process like 50% of the data. Like the other half is kind of unstructured, can't be processed. So we help them at least get some information out of that.
Cool. So I think one of the trends that we're seeing is the rise, obviously, of digital commodities like blockchain-based currencies, right? I think that even bigger than that, we're seeing a lot of people, companies, investors trying to figure out the consumer space with models that are dubious at best. I think that's one of the faux trends, actually, is that right now you see a bunch of consumer-friendly companies who are basically parlaying debt instruments, right, to consumers. You see new banks, right? I believe that technology has the capability of moving us past digital models of a previous version, right? So before debt instruments and banks have been like the consumer-facing kind of interface with financial infrastructure and the consumer, I think technology is going to enable something else that we've yet to see. So we are very, very early in fintech, despite a decade of it already. So.
Yeah, I mean, so the blockchain trends that we see kind of hitting fintech most, having the biggest impact in fintech, I guess the first one is gets talked about a lot, which is just the securitization of previously difficult to trade assets. So you see like people are tokenizing art or real estate or whatever. The one that we're maybe a little more excited about is what we call meaningful blockchain application tokens. So you see people making protocols that allow for decentralized trading, like 0x was one we're pretty excited about. You see a lot of things on the protocol level that are actually sort of re-engineering the basic level of the financial instruments that are running the world right now. So that's what we're a little more interested in, that side of it than the securitization side, but I guess both of those are having a pretty big impact on the fintech world.
Yeah, kind of a follow-up question while I've still got you. So you guys are all in on blockchain. Why?
I guess there's a couple of reasons. We invest in what we know, and as a firm, blockchain is where we have expertise. We're the biggest firm in China doing this. We have like the biggest ICO platform. We get to see most of the good deals and of course a lot of the bad ones. The other thing is, I guess blockchain deals are pretty simple compared to traditional VC deals. So like my friends that are in traditional VC spend a ton of time, hammering out the deal terms and anti-dilution clauses and all this stuff, whereas the deals that we do tend to be pretty simple. I mean, we invest some cryptocurrency and we get some token in return. We're not really worried about dilution. If the company does well, the token will go up and we'll do well. So the incentives are really clearly aligned. So that's something like kind of, besides just the expertise aspect of it, doing these investments really makes sense to us on that level.
Okay, Derek, you have some kind of contrarian type ideas, or maybe that aren't as fun to hear. Like, here's your moment to speak on them, right? So you think that kind of the things that what I'm understanding you say is that what you're seeing in fintech is really kind of incremental, just digitizing what already exists.
Yeah, I do actually.
So how could we do better?
I'm not sure yet, honestly. Right. I think 2007, 2008 has been one of the most seminal moments in Gen X millennial history, right? For obvious reasons. But imagine if the financial crisis of the late 2000s hadn't happened. What would fintech look like? Think through that, right? We've had a decade of regulatory and compliance startups, right? Lending startups. We've had a decade of wealth management startups, right? And the consumer space is essentially untouched, right? You may say, Derek, no, you're wrong. Like the PFM space, personal finance space, is very, very crowded, right? There's Mint, Empower, Penny, Albert, the list goes on. And I would counter that they're all iterations of the same product. I would say that they're iterations on a spreadsheet, glorified spreadsheet, right? Soft blues and soft greens, and it's friendly. It's a spreadsheet. They're cross-selling financial products, right? So when you put spreadsheets, cross-selling financial products, and exits to larger financial institutions, what do you have? It's a bank. It's a bank. And then there are actual banks, right? Simple, Ally here in the States, Monzo, Tandem, etc. They're banks, right? Banks are really, really good at what they do, and that is financial infrastructure. They're really, really shit at product development and doing stuff for the consumer on that front. So why doesn't tech partner with financial institutions in order to bring a new product development experience? And I'm not just talking UI. I'm not just talking like what Slack did for chat rooms. That's not what I'm talking about. I'm talking about something not just incremental, something revolutionary, right? And taking an on-demand model like Airbnb, like Uber, like fill in
So
your
with that
favorite
said,
platform there.
Is that the reason why you've joined the fintech industry, right? Because your
Yeah.
background isn't necessarily starting in fintech, right? You could be.
That's right.
There's a lot of other easier, more like there's more money to be made in other verticals, in my opinion, right? In my experience as well. So why why
Yeah,
tackle
I mean,
this
more
challenge?
money to be made than finance. That's arguable, but
Fintech.
yeah, sure.
Finance seems to be doing okay.
Yeah, I've always been interested in like really, really large problems. I think like what these guys are doing is very admirable as well. Like the problems that exist within finance like touch literally everyone, right? And devoting my time to another ad network wouldn't be the best for all of us. So.
Excellent. Well, I appreciate that. I think as an industry, appreciate that we're getting people from other industries that are, floating into it and bringing their expertise. I think really what I'm saying, there's not money to be made. There's tons of money to be made in fintech. It's just a much longer sales cycle. It's a much more challenging space than a lot of the other ones. To kind of iterate my thoughts on it, Dennis. So yeah, talk to us about your product. Isn't per se, a fintech, product, but you guys are going after the financial services vertical. Why are you guys doing that?
Yeah, I think, because being in Toronto, we have the top 5 banks that's in Toronto. We also have all the tier 2 banks there as well. So it's just natural that, for all the customers that we talk to, we are in the finance space. So we have some interests there. These financial institutions basically have all kinds of data that they want to use, and to use AI as an automation tool to improve customer experience. So basically, they would talk to us anywhere from building a chatbot as a front end for their consumer users, and then go all the way to the back side, to ingest all their data and then provide insights to, for example, their call center agents, so that when a customer comes in, right away all the information shows up. The AI system can even try to predict what the consumer or the end user is trying to ask and show them answers. So all the way from front to the back, automation with AI.
Excellent. Let's see. Ken, I'm trying to think of a question for you. So I'd be like, I don't know. I could have asked you the main question I have. I guess so. Title III has created the opportunity for you. Like, where do you see this in the next few years? How are you? I guess here's the question I really have: is how are you going to win versus the other people in the space? And is this something the world really needs?
It's a good question. I want to address something that Derek said earlier. It's like, what trend is there in fintech? It's like, I'm going to disrupt the world. I'm going to start a fintech company, but I need to work with the banks to accomplish what I'm going to try to accomplish. I need to partner with the banks, and my exit is to try to sell to the bank. So it's not really so disruptive. It's just a process of, the banks, because they can create money, they're sort of using the startup world to be, their internal incubator to find how they can improve the customer experience. In our case, out of the 2008-2009 crisis, I think it was Rahm Emanuel who said, "Never let a good crisis go to waste." All right, so Congress convened in desperation, said we need to update these antiquated securities laws. Lending has seized to the small business community, and so the Jobs Act was born. In this dysfunctional government, almost every Republican and every Democrat voted for the Jobs Act. It was signed into law by Obama. The SEC, of course, took 4 years to come out with the final rules, but there's a lot of wind behind the back of the Jobs Act. There's a lot of people that have a vested stake in seeing this succeed, and I think it's only going to improve over time. And so Jeb Hensarling, a representative out of Texas right now, has a bill in Congress called the Financial Choice Act, and that removes all caps on a Title III offering, right? So I think over time, it's just going to be less and less restrictive for companies to raise money via this avenue. What will be interesting to see is how can you combine approved regulatory securities offerings with the concept of an ICO and with blockchain, because I think that there's terrific synergies there.
Okay, talk to me more about that. So we talked about that earlier. ICOs, complement, competitive. How does that fit into your world?
Well, the concept of an ICO and a smart contract just makes so much sense, because if you ask me who Growth Fountain is disrupting, we're not so much disrupting banks, but we're really disrupting law firms and the traditional former way of underwriting securities offerings, and just sort of the dead weight loss of contracts. So what a smart contract and an ICO can potentially bring with that, as Eric mentioned earlier, is you don't have to sit there and fight over terms and anti-dilution and all this stuff. You don't need a lawyer to settle a private transaction to make sure that it's a legitimate security that the company owns. That can all be carried through it and eliminate waste. The challenge, and Eric can speak much better to this than I can, with ICOs, is that they're not legal offerings in the United States. Right? Securities is a very heavily regulated industry, but there is a way to combine the concept of ICOs and blockchain with a legal security offering.
You think, is there anybody, is that where you're going, or is that where you see the industry going?
It certainly seems like, I mean, the interesting thing about ICOs from where I sit is that these are not, right, Ethereum seems very unstable to me. Right, you had the DAO that came out and raised $100 and something million, and it was stolen the next. And the whole point of Ether was that that can't happen. So I'm not a tech. I'm not a coder. I'm not really as heavily into technology as I am sort of in just business operations. But I think when you can create something that's a little bit more stable, and you can combine it with the legal avenues of offering securities, because right now all this money that's being raised in ICOs. The irony is it's less safe than what would happen through a traditional securities offering, but for some reason the tremendous demand is on the ICO side of things.
I'm going to ask one more question to the panel, then I want to open it up for questions from the audience, because I think that's where the real value is going to come from. Let's say we're sitting on this panel in 5 years. Like, what is the trend? What do you think? What's your either crazy prediction or moderate prediction? Like, what's the world look like in 5 years? And I'm going to open that up to you here.
Yeah. To address what Ken was saying, like about Ether being unstable, I think there's kind of two ways you can look at that, and this ties into like where we're going to be in 5 years. So I mean, I guess most of you are probably aware of like what a bug bounty program is. So like a company like Facebook or Google will offer hackers, 50 grand, 100 grand if they identify a really serious bug that leads to a security flaw. And what you can think of these huge heists that you see, I mean, it's $30 million or $100 million worth of DAO, is just like the world's biggest bug bounty program. And as a result, you're getting like the best hackers in the world that are all attacking these systems. And so on the one hand, it looks terrible, but on the other hand, these systems are becoming the most battle-hardened, decentralized systems we've ever seen. And so I think in 5 years, what you're going to see is that a lot of these systems that look really unstable and kind of scary to us now are actually really, really great ways to raise money. And I think that's kind of where we're headed. I guess the other thing that I would address with what Ken and I guess what Derek were saying, they're kind of frustrated that like the fintech space sort of acts as this like free incubator or whatever for the banks. And I think what you see in the US is that is the case. If you look in China and if you look at like Southeast Asia, I mean, a lot of people, like one of our friend companies, these guys on Misago give this talk called Unbanking the Banked. And I guess it's funny, but like a lot of these people have never been banked in the first place, and they're going straight to these mobile wallets. And the banks are going to be really, really surprised when that stuff comes back here. And I think that's happening. I mean, it'll start slow and then it'll get really, really fast. So we're looking forward to it.
I totally agree with that last point there. So two trends for you over the next 5 years. Number one is on the market side. To kind of piggyback on what Eric was saying, the U.S. arguably is currently not the leader and will certainly not be the leader in 5 years. I think Southeast Asia, in particular Singapore, has leapfrogged us already, like by a lot. Africa as well, like any individual country there could leapfrog us certainly over the next 5 years. That's on the market side. On the tech side, I think one of the most interesting things is actually going to be culturally. We being 18 to 34-year-olds, is going to be used to technology making financial decisions for us on a regular basis. You already kind of see this with like robo-advisors and things like that, but it's going to be automated away over the next 5 years. I think culturally it's going to be more acceptable for me to be kind of devoid from the financial decisions made with my money, that I trust tech more than I trust myself with my money, and that's going to enable a whole host of new technologies. So that'll be really interesting to watch.
Yeah, basically concur with what the last two panels said. basically a lot of what we see, like for example, chatbots for banks, they are already going ahead in Asia, Southeast Asia. Basically, banks, they're already sort of deploying chatbots in, for example, there's a bank in Singapore that's doing mortgages or through a chatbot, right? Basically, they deployed it. They see that the numbers, a lot more people are talking to the chatbot. They are signing up for mortgages through the chatbot, so the return is there. And because in Asia the regulatory framework is different, so they're able to innovate and push out. Back here, we are talking to a company that they're saying like in 3 years, 2020, they see like 40% of all their transaction will be done through a chatbot or a bot of some kind, right? Either it's like user initiated, basically a user types on to a texting that says, hey, I want to transfer money or I want to buy this that way, or even through when certain kind of conditions are met, like for example, you have a fridge, the fridge says, hey, you're out of milk, it goes and buys it for you. That's also through some kind of bot, or even through the case where a text message goes to a call center agent. Like I mentioned it before, the agent gets all the information about that user, before the agent itself can actually see the message, right? And then the AI itself could also already provide the answer. So a lot of things, a lot of transactions can be automated and using AI.
I think when Xerox was created in like 1940, it took like 10 years before they built the actual first printer once they had the design for it. And then they had a monopoly for another decade before there was even another competitor. Right? That's the 1950s. It's the 1960s now we're talking about. You look today and the cycle of disruption is so fast. And I think, sadly, everything that I've heard on this panel is going to lead to 5 years from now. It's going to be really tough to find a job if everything is automated and AI is running the world. And I'm hoping that as the cycle helps capital formation, at least from where I sit, capital formation creates startups, that creates jobs that can somehow, I don't know where the jobs of the future will come from, but hopefully they can work in coordination with data.
You've left us with a very entertaining idea, thought-provoking. Yeah, will AI take all of our jobs? Questions.
Let me answer that. Let me answer that. Basically, so all the reports, trends that I see, basically AI in, let's say, 5 years' time, they are looking at just automating 30% at most of a workload. So it's not 100%. You're not going to have a robot sitting next to you in 5 years, right? The technology is there, but it's not as, I guess, so mature that it could take over the world right now, contrary to what Elon Musk says.
Okay, we'll take a couple questions.
How are you preparing for laws that may currently exist that demand that AI technology explain how it came to a reason, or that the AI explain why it rejects giving a loan to someone? And what about people simply getting very upset about AI making all these decisions about their financial life and rejecting it, and then giving human lawyers lots of work to sue the banks and the new fintechs? How are you preparing for that?
Right. I think governments basically like self-driving cars, right? They are not going to allow self-driving cars tomorrow. So it's going to be level 1, level 2, level 3, and so on for self-driving cars. So the technology will be introduced gradually so that the public has time to get used to it. In terms of the technology explaining itself, that's also like a hot area of research right now that they are actually building into the AI. They're just starting to do that, to build into the AI the capability for it to explain why it made a certain decision. So that's also coming up.
The average age of the company I lead, we're 13 people. The average age is 23. They are already used to technology making decisions for them, right? So it's not going to take laws to enable or disable that. In fact, I'm a huge fan of the GOBA. I'm a huge fan of the DOL legislation from last year that puts a fiduciary duty responsibility on top of those managing retirement accounts. I'd love to see more of that. Because as soon as you have more and more institutions that have a fiduciary duty, whether the banks are otherwise, like obviously banks already do, but as you see more and more institutions that have a legal fiduciary duty to their constituents, they need technology to make sure that they are providing the best investments, that they are providing the highest interest rate accounts, that they are looking after the consumer's well-being. That's what legislation is for. It's not the prevention of technology. It's creating an environment where technology can help the consumer. So getting rid of jobs, getting rid of decision making, like tech is better at this than we are. And it may take laws and regulation to help us realize that.
This is for Eric in particular. So I run a cybersecurity firm that leverages blockchain for cybersecurity purposes. I don't know if you're familiar with Enigma.
Yeah, I am.
So did you see what happened yesterday?
Yeah.
So I'm yeah, real quick. All right. So they're doing an ICO on September 11th, by the way, which is terrible. Anyways, so they're doing an ICO. They got hacked. I mean, everything got hacked. Their website got readdressed. I mean, everything got taken. They lost $500,000 in coins, quote unquote. And they're a cybersecurity firm. So I'm a cybersecurity firm thinking of an ICO. Love to get your opinion.
Yeah, I mean, so we offer, we have a hosted ICO platform in China. And in China, the direct model of doing ICO funding, which is what Enigma was working with, where essentially you're trusting users to paste an Ethereum address into a wallet and just get everything right. There's a lot of technical things that can go wrong. And like you said, I mean, it's at every single level you see hack. And the thing, one of our companies these guys that we really like that I still think are going to do really well, called CoinDash, they got hacked at the DNS level, and someone redirected their domain name to another site that had a different Ethereum address, and that they lost half their raise. So I think in a lot of ways that actually points to the model that we have, where we have this hosted platform. You don't have any of these concerns. It looks like it's a UI like Kickstarter, and your backers can just go ahead and press the back button, and that's all they have to worry about. So I think in a lot of ways, people are resistant to that in this field, just because we're all about decentralization, and it feels kind of silly to centralize something again. But I guess there is a place for centralization even in this world, and I think security-wise, it's a huge advantage for us.
On that note, let's thank our panelists. Okay.